Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been very range bound. Heading into the open, we have pre-market resistance at 29.25 to 31.25, and we would have to see broad market strength and some upside momentum in order for the market to put in a breakout above 29.25 to 31.25. In the event that we are seeing some decent upside momentum on the NYSE tick, and the price action is also quite smooth and fluid to the upside, then a breakout beyond 31.25 would bring the 35 to 37 area into play. That is still a spot where responsive sellers can be active on first test, but as the market approaches that zone, we are going to have to gauge whether ES is getting exhausted into 35-37. We'll have to look at the underlying momentum situation. If we're heading higher on a lot of broad market strength and sustained upside momentum, then we may only get a reaction at 35.37, and from there we could head higher and tag 40.5 and possibly even the 45 and 47.5 area, although that would require much higher volume and continuous upside momentum. On the downside, we have pre-market support at 21.25 to 22.75. That's an area where buyers could be active, but it's not necessarily a very strong area of support. So we do have to exercise some caution. So for example, if the market is heading down there and we're seeing a lot of underlying weakness and the NYSE tick is completely below zero and printing some pretty significant negative values, then we're not going to want to trade the 21.25 to 22.75 area because it is a more aggressive area of support. So we do have to assess the situation in real time as the market tests 21.25 to 22.75. If we're seeing a lot of weakness, then it could bring the 18.5 area into play, the naked VPOC at 16.75, and the initial support zone at 12.75 to 15.25. As long as the market is exhausted into the 12.75 to 15.25, that's an area where responsive buyers can be active and we can get a bounce. Below that, we have some better support at 24.08 to 24.10. It's a pretty high odd spot for responsive buyers to be active. And then finally, we have 2400 quarter, 2402 quarter, which marks last month's low. Now, given that we're coming back after a holiday, the volume is still fairly light. You are going to want to be selective on any trades that you take today, because right now the short-term bias is neutral, and that means that the market is very range bound. So you don't want to initiate or enter new trades at very aggressive prices unless there are very clear and strong signs of directionality. So what that means is that you're not going to want to buy the 29.25 to 31.25 area unless the market is showing you very clear signs of a strong upside breakout. And by the same token, you're not going to want to short when the market's already trading down at 24.21 unless you're seeing very clear-cut signs of excess weakness, and even then you're probably going to want to time the short setup a little bit better. So our short-term bias today is neutral. The market is very range bound, and if the volume continues to be light, then the market can continue to be relatively choppy. And when you're trading in that kind of environment, you just want to be very selective with the trades you take. You want to pay extra attention to trade location, make sure you're entering at a good zone, and if the market doesn't provide a good enough entry, then it's better to stay out and wait for that high quality trade setup rather than get involved at poor location or get involved after the market has already put in an 8 to 10 point move, because at that point it's probably exhausted and it may not go much further. So those are the main ideas heading into the open. Let's see how ES responds to pre-market resistance. Let's keep track of the underlying momentum situation via the NYSE tick and broad market strength or weakness via the advanced decline, and we'll take it from there.